Welcome to Common Sense Investing. My name is Cameron, and today I am going to be discussing pre-revenue stocks. So thank you for joining me. I hope you enjoy this presentation. Before I get to my presentation, I've got a few things that I want to cover. So number one, none of this is financial advice. I am not a financial advisor. I'm definitely not your financial advisor. What this channel is one average retail investor that likes to discuss stocks with a good group of other people who also like to discuss stocks so we can all become better investors. The other thing that I want to make clear with this video is I don't want a lot of people looking at these stocks and going, oh, but Cameron, they make revenue. Look, they have some revenue coming in. They're not a pre-revenue stock. When I'm talking about a pre-revenue stock, I'm talking about a stock that simply doesn't make what they should be making in anticipated revenue, right? So just because they get a little bit of money trickling in from a pilot project, or just because they've been making $250,000 every quarter for the past 10 years, that doesn't not make them a pre-revenue stock. I still consider them a pre-revenue stock, right? So I am looking for significant revenue, significant product market fit. If a company does not have that, then I consider them a pre-revenue stock. I just wanted to be clear. But typically what I'm talking about with these stocks is we always find these tiny little companies hidden away in the microcap world, in the penny stock world. They look absolutely fantastic. They look like absolute gems in the middle of this giant Wall Street space of massive stocks. They have this unique product. They have this unique service that they're able to offer people. This is going to change the world. This is going to change this industry. It's so exciting. And you look at them and everything looks so fantastic. But at the end of the day, they're pre-revenue, meaning they do not have a product market fit, meaning they've got a unique idea, they've got a unique service, they've got something to offer the world, allegedly. However, there's nobody really buying it yet as far as validating, buying it in mass, buying it at commercial scale. Can they produce something commercially? Can they produce it to scale? Do people want it to scale, right? So that's what I'm talking about with pre-revenue stocks. That's what we're looking at. But you know what? This is always very tempting. There's all kinds of people out there who have requested for me to look at pre-revenue stocks. And this is where this comes from. So the rest of this video, I'm going to be looking at 16 stocks. These are not 16 of like my failed picks. These are not 16 stocks that I was necessarily bullish on at any point. I've never owned any shares of any of these stocks that I'm going to cover. What it is the following video is 16 stocks that I've been asked to cover since May of 2022. Since I started my YouTube channel, I have been asked to provide coverage for roughly 16 pre-revenue stocks. And all I wanted to do is go back and look at the performance. I covered 16 of these things. We're now 2 years down the road. How have they done? This is about as unbiased as you can get. Yes, class is in session. Hopefully everybody can hear me. Everybody can see me. Thank you for joining. Really appreciate it. And this answer here, it's not that hard. Pre-revenue stocks are usually a bad investment. Maybe. I'm going to look at 16 of them. I'm going to talk about that, right? And this is a common misconception, good or bad investment. There are different ways to invest, whether you're investing long-term or whether you're trading, that can make the difference between whether or not you make money with some of these pre-revenue stocks. So I'm just going to get into it here. I hope everybody enjoys this. One of these, and the most famous, obviously, is metamaterials. So I had an epic saga with metamaterials because this was a meme stock. 25,000 people on Reddit just loving this stock. Thousands and thousands more on FinTwit and everywhere else. Metamaterials is the ultimate pre-revenue stock. They had 350 patents, 450 patents, 500 patents, however many patents. Do not let anybody tell you that patents are worth anything. So right now, metamaterials is at $3.77. That's because they went from $9.85 down to 5 cents. And then they did a 1-for-100 reverse split. Their market cap right now is at about 20 million. So when people talk about patents, when we talk about the risk of pre-revenue stocks, I will always look at metamaterials because everybody thought with all those patents, this was one of the safest pre-revenue stocks out there. Look at all these life-changing technologies. Currently, they're sitting at a market cap of about $20 million. I would say that that's a massively failed pre-revenue stock. Graphene Manufacturing Group. This is one of the first pre-revenues that I covered. They have a way to produce, or they allege they have a way to produce graphene without having to mine it. This has a loyal fan base, but as you can see, the loyal fan base has not been rewarded. It has been trickling down. So this wasn't your typical pre-revenue stock crash. It's just slowly going down. It gives people hope every once in a while. You could see today I took the picture. It's actually up 7.44%. But really, it was trading for what? $5 or $6 during about November, December of 2022, and it's been going down ever since. So that's probably a fail, right? Origin Materials. That's a big one I used to cover, right? A lot of people love Origin. You could see this, what happened right here. It was trading at $4, $5, $6, $7. Everybody's super excited about this stock. And then it was like, oops, they were supposed to produce their Origin 1 plant. That was finally a production plant. That was finally a production plant that was supposed to start making them revenue. They were finally going to start making revenue. And at that point, they finally had to admit that their technology isn't exactly working exactly as how they promised everybody. They got that massive share price crash from about $4.50 to about $1. And I think that took only 2 days to hit that. So this is another pre-revenue stock, massively down. And the worst part is sometimes it's not a trickle. Right? Sometimes it's a crash. You have to be absolutely careful with these pre-revenue stocks because it's all investor sentiment. Mullen Automotive, I don't think I have to talk about this one. I think Mullen's finally trickling in a few $100,000 of revenue every once in a while. This is another probably a scam stock, right? It's a meme stock for sure. So it's a tough one to put up here on the chart. But yeah, Mullen Automotive, huge promises, electric vehicles, competing with Tesla. Absolutely, people love this company. It's down to absolutely nothing. It's like reverse split 3 times in 1 year, something like that. A little bit closer to home, Drone Delivery Canada, Canadian stock. And they make a little bit of revenue, but it's all pilot revenue. They're trying to break into this industry of basically drones delivering products business to business. The problem with some of these pre-revenues is the value that they're traded at, because once they break out the expected value, oh my God, if they could break out with this actual drone delivery, if it can work, they're going to have a moat. They're going to be the only player in this industry. They're going to make $100 million per year. And people already factor in all this growth that hasn't even happened yet. They're still working on pilot revenues. And year after year after year after year, Drone Delivery Canada is still working on pilot revenues. It's going down, except again, what keeps happening with these types of stocks, right? It was down to about 15 cents and then it gets another pump. It's back up to about 31.5 cents, but nobody's really making money with this one. Microbot Medical, robotic surgeries, down. This was the AI craze, right? Everybody got excited about this stock, at least when it pumped for the second time here. This was kind of the AI craze in here, where all of a sudden AI is going to be delivering all of our surgeries. It's all going to be done with AI robotics. That's kind of what Microbot Medical was promising. The only problem is they don't actually make any revenue doing that, so it's down as well. Oracle Resource Group Core. I haven't covered a lot of resource stocks on this channel. Definitely not a lot that produced absolutely no revenue. Oracle, I don't really want to pick on them, but this is really one of those cases where you have to be careful. Like Oracle proved resources. They went up in share price. Everybody got excited. That was kind of the time to sell and make money and get out for shareholders, and they didn't do that, and they're just holding. And now they're down to the same price, basically. They're up 58% in 5 years. That's great, but that's not exactly what I'm looking for in a stock, a microcap stock, if I'm going to take that risk. These types of stocks, you just have to be very leery of. Islis International, Cameron, they make $100 million of revenue or whatever it is. I don't believe they do, right? What Islis International does is they put in proposals to buy companies, they put in propositions to buy companies, and then they report that company's revenue as their own in their earnings, right? So most of Islis International's revenue, most of their earnings isn't actually their revenue. They don't own it yet. And you could tell that by go look at how much they dilute. They dilute and dilute, they dilute and they dilute. If they were actually making money, they wouldn't be diluting as much as they are right now. So Islis International is another one of those so desperate to try to make revenue that they find Very constructive ways of doing it, but it hasn't worked out for them yet. Pangenomic Health. These are these companies that just get in there. They're trying to get in on the excitement of a space. When everybody was excited about digital healthcare, Pangenomic Health got in there. You can see their share price was what, about 30 cents, 31 cents, now down to 1.5 pennies, still not making money. AITX, this is another one. Cameron, they make revenue. They make $250,000 of revenue every quarter. And on top of that is about $32 million of debt. So I look at that as insignificant revenue. I consider that a pre-revenue company. They don't have product market fit yet. Look at that share price. That's just embarrassing. That's all dilution. What all of these companies do, all these pre-revenue stocks do, is dilute. EcoWave Power. I like EcoWave Power. Don't get me wrong. This is where they're making energy from ocean waves. Down. Generative AI solutions. So down. I'm not even going to talk about this one. This is the garbage stock. Look, what are we looking here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That is 12 stocks, 12 of these shiny, beautiful pre-revenue stocks that I have covered. I have been requested to cover on my channel in the past 2 years. 12 pre-revenue stocks, all down massively. Some trickle down, some you're down a little bit, some you're down a lot, like 98, 99%. This is what happens, right? They promise this, they deliver this. Now, there are sometimes a few exceptions that I was going to talk about, right? So I recently made a video on Exro Technologies. I was a little bit more bullish on Exro Technologies. You could see the up and down pattern with this one. And where I became a little bit more bullish on Exro was at this price. Pre-revenue up to today. They're making a little bit of services engineering revenue now. And actually right now is when they're actually supposed to start making revenue. But I did like Exro Technologies at $1. They went up to about $3. In my opinion, if you're going to invest in these pre-revenues and you do invest in momentum swing trading like this, you need to make sure that you know that this is not a long-term hold, right? These things go up and down. And for retail investors, if you could invest at the right time on the way up and make some money, that's absolutely fantastic. But as you could tell, Exro Technologies closed today at 88 cents. They're on their way down again. HPQ Silicon. This is another one supposed to be close to making revenue. Could be soon, could be this year, could be next year. Very close. People are more excited, but it's been down. Even though this is a company that's maybe a little bit more legit. This is a bit more recent. When I was asked to cover this company, it was sitting at about 24.5 cents, 25 cents. Now down to 21.5. So it's slowly trickling down, right? Now, before everybody says, okay, but so many of these companies are garbage companies, Cameron, I would never invest in generative AI solutions. Keep in mind, the reason that brought this up for me today is there are pre-revenue companies being pumped right now on social media. And that's why I had to make a video to just do my part, just to make sure that people understand, right? I'm warning you. Versus AI. I've been mildly bullish on Versus AI at times. I like what they're promising. I like what they're doing. I don't believe they're making revenue yet. They did have one pilot project where they did make revenue, but people are very excited about this stock. I was excited about this stock at 60 cents. It went up to just about $3. Then it came back down. Now it's going back up, right? So Versus AI is one of them. Another one where people have made money is Aduro Clean Technologies. So Aduro Clean Technology is very popular right now. Every Canadian YouTuber is talking about them. In 5 years, they're up almost 600%. They're still going up now. A little bit choppy, up and down, but they're still going up. So even as I watch pre-revenue stock after pre-revenue stock over the past 2 years get absolutely obliterated on my channel. Everyone that I've been asked to cover has been basically absolutely obliterated. Except for maybe recently Versus AI, I still find on social media people pumping pre-revenue stocks. And one of these right now that's very popular is Aduro Clean Technology. So Again, I think that's fine. If people want to trade, if people want to invest in these pre-revenue stocks, I absolutely love it. Go for it. This is the microcap space. This is supposed to be your fun money. This isn't your retirement money. This isn't your kid's college fund. This is just a little bit of fun money, right? But if you are going to invest in a stock like this, if you are going to invest in a pre-revenue stock, and again, not financial advice, just my opinion over the years, and I want to create good discussion about this, you need to have a stop loss. I've made videos on stop loss before. I currently have a few videos in my Patreon right now talking about stop loss, because that's in the book, How to Make Money in Stocks, where it talks about investing on the momentum trading, where you're investing in the way up, and then you set a stop loss so you don't lose money on the way down. You need to consider, in my opinion, if you're going to invest, if you're going to gamble, if you're going to risk on these speculative stocks, you need to think about what price, what loss you're willing to take. Now, if it's truly your fun money, if you're truly gambling and you're like, I can afford to lose 100%, I don't care, Cameron, that's absolutely fantastic. But the problem is I'm seeing right now today, like on metamaterials, so many people saying, I lost all my life savings, I'm homeless, I lost my kids' college money, I lost the money for my car, I don't have a vehicle anymore. People took massive amounts of money, invested it in these speculative stocks, not knowing how to invest, never using a stop loss. Metamaterials never made money other than the money that they purchased through that business that they bought. I forget the name of it right now, but they've never made organic revenue. And now they're down like 99%. So if you're going to invest, in these spec stocks, make sure you think about what price you would like to get out of. Like even people that invested, one of the problems is people fall in love in this period here, right? You invested in a speculative momentum pre-revenue stock like Graphene Manufacturing Group here. You got in at like $1. It goes to $5. You made a shit ton of money. And then you just think hodl, because that's going to happen again. And usually it doesn't. Usually what we see is this. So you have to make sure, if you've made money, if you've lost money, whatever happens, make sure you set a stop loss. You find some price that you're comfortable at for getting out of this stock and either taking profits or at least limiting your loss. Now, for me personally and on this channel, if I do make videos on pre-revenue stocks, what you're going to find is even if I'm mildly bullish like I am with, say, EcoWave Power, I kind of like that company, right? They're making energy from waves. If I'm even mildly bullish on them, though, all I'm doing is putting a company like EcoWave Power onto my watch list, and I'm sitting there and waiting to see when they bring in revenue, what that revenue looks like, the quality of that revenue, their balance sheet, their earnings, their margins, and everything else. That's me personally. There's too many other good stocks out there that are making revenue that I can measure, that I can reduce my risk on, because with a lot of these spec stocks, the pre-revenue stocks, for me personally, just too much risk. And when we look again at this video, 12 of these pre-revenue stocks were absolutely crashing down. XRO is down, so that's the 13th one that's not that great. HPQ Silicon's down, 14, right? 15, 16. Out of 16 pre-revenue stocks on my channel, 14 have lost people a lot of money, and the 15th and 16th one, we'll see. We'll see what happens, right? Only time will tell. That's it. That's all I wanted to talk about. Hope you enjoyed that presentation. Questions? Anybody own some of those stocks? I hope not. I have only myself to blame because I never set up a stop limit. And you know what? Common misconception too. A lot of people say, Cameron, I watched your video. I don't want to set up a stop limit, like an automatic stop limit. If you don't want an automatic stop limit, that's fine. I just want to get people thinking. At what price do you have to sit down and say, it's down too much. I made a mistake somewhere, right? My research, there's a mistake in my research. There's a mistake in my due diligence. There's a mistake somewhere. I valued it too high. The stock market is not valuing it as high as me. At what price should I sell? So it doesn't necessarily have to be like an automatic stop loss, as long as you have it in yourself to say, you know what, if it gets to this price, I have to seriously consider selling it, because that's my loss point. I could take that money, I could invest it in a better company, because what I'm seeing today, what I'm trying to break today, is seeing all these people on social media that are basically down 100%, 99% on some of these stocks, just still trying to argue that the company's a good company. It doesn't work that way. It doesn't work that way, right? I've seen so many of these pre-revenue stocks come in with huge promises, and most of them lose you money, right? So there we go. The problems here are always two things: no transparency and CEO lies. Yes, lots of times, yes, right? And what we're seeing these days through social media is excuses for that. There's people blaming that the stock market is corrupt, naked shorting, synthetic shares, hedge funds trying to steal your money. Like, there's all these excuses that people don't want to admit they were wrong. So they'll come up with ways like, I trust the CEO. He couldn't have possibly lied to me. Well, you follow the trail of money. Who made money here? Like, whoever made the money was probably the one doing the most amount of lying, right? And when you get into these spaces, especially when you get into the small microcap penny stock space in Canada, in the United States, you're taking on enough risk to go over and above that and say, not only am I going to come down to the space and risk the lies and this deception and poor accounting and poor earning reports and everything else, but I'm going to go further than that, and I'm going to dive into this bucket of pre-revenue where there's not even numbers that I can look at. You're increasing your risk level, right? You're increasing your risk level. Dan has a small position in HPQ. A lot of people that I'm talking to do. A lot of people like that. It's love or hate with that company, right? A lot of people love HPQ. A lot of people don't. It's a lot easier for pre-revenue companies if they're in an industry or a niche that they can market, right? A lot of people are looking at silicon and the potential for that in the future, and people are getting excited about that. I'm not sold. I mean, again, when I look at HPQ Silicon, I think, why don't I wait until the revenues start coming in? So one of the problems with that is people think, I always need to buy the bottom. Everybody wants to time the bottom. It is very hard to time the bottom. If you go read the book, How to Make Money in Stocks, it basically teaches you, if you always try to time the bottom, you're going to be an average investor. You want to wait until the company does something, until something changes to make the company better, that drives up the share price. Now, if that's starting to make money, that's what it needs to be, right? I'm willing to give up that little bit of profit coming up off the bottom just to reduce my risk, knowing that they're actually getting a product market fit. Yeah, fumed silicone. What HPQ makes. Anyway, I was going to make a video on HPQ, but it's a very complicated business. They have 3, 4, 5 different things on the go. If you go look at their investor deck, they actually have different timelines for everything that they have on the go. If they start delivering, I'll take another look at them. But right now, as of this point, they're on my pre-revenue stock list, which doesn't have, like, completely unbiased. Those weren't picks. Those were viewer requested stocks. 16 stocks that have been requested in 2 years, 14 of them tragically bad, right? Only 2 that are just kind of hanging on. So anyway, I'm going to keep this short tonight because it's an irregular time and day for my video. I just wanted to make something and have a little bit of fun with it. So thank you everybody for watching. I really appreciate it. I hope to have another video out for you soon. Have a great week trading and investing. I hope you're making money out there.